Morning, everyone. Last day here in New York. I'll be in my normal studio tomorrow morning when I talk with you. Just thought I'd give you a quick rundown of what I saw this morning before we jump on an airplane. First and foremost, if you're watching this channel, you know that today is the Fed rate decision. By all accounts, it looks like they are locked into a quarter point. I do think it'll be interesting to hear the logic that Powell gives when he sort of announces it to the world. Uh, as I've said on this channel, I think it's going to be pretty delicate, right? Inflation is higher than expected. I think it was 2.2 when they want to get it to 2. And then the consumer is a lot stronger. We saw retail sales come in at a point 0.4 last week when people were talking about a kind of negative 0.2 to 2 range. So it if the consumer's okay and inflation's higher than expected, it's not normally an environment you would cut rates in. In addition, what he said last time is he's cutting rates as a defense mechanism to the headwinds, and by all accounts, the headwinds have substantially subsided. The trade war seems to be on a positive trend for several days, if not upwards of a week now, with both sides giving a little bit, which is a really good sign. So it'll be interesting. Uh, Part of me thinks he should be a little aggressive and not lower rates, and basically say we are seeing stronger inflation, strong consumer, and oh, by the way, the headwinds are subsiding. But I don't expect him to. I expect the Fed is a lot more influenced and not as independent as we would all like. So I think that's coming. In addition to that, mortgage apps to purchase homes were up 6% week on week, which is interesting. Refi was down, but the purchase apps were so strong that it carried a positive number. Again, this channel is about tracking the consumer and tracking the cost of capital. Those both impact real estate. And to see mortgage apps to purchase increase at that rate was interesting. Curious how many of them locked in low rates and will actually purchase, actually get to the closing table. We will see, but that is interesting. I saw FedEx release numbers that were disappointing to the street, and they just get clocked after hours, down 10%. When you sort of peel back those numbers, there's a couple of things I think we can learn from them. One is they are a global transportation and delivery company. So what you're seeing is global stress in the system. It's not just a U.S. based company anymore and hasn't been for decades. So it is really a good harbinger of what's going on in the world. So watch out for that. Excuse me. I don't know why I do that all the time in these channels. But anyway, so watch for FedEx. The other thing is, if you actually read their announcement, it looks like they lost a big customer. It doesn't say explicitly, but it certainly sounds like Amazon. Amazon has to be a low margin business for them. In fact, I bet some of it was near break even. So while the top line will take a hit, I bet its bottom line will be made up very quickly. Uh, this is just more signs that Amazon is the behemoth and probably will start doing their own deliveries sooner rather than later. They'll probably buy several delivery companies and couple them together would be my guess. So again, FedEx had a pretty significant drop, 10% after hours. Another reason why I don't do stocks, right? You have market risk, industry risk, and company risk, and I just can't keep up. So too much. The big question of the day for me is: have interest rates bottomed for the year? I think there's probably a pretty good chance of that. What we saw 30, 45 days ago with all this negative stuff building up really seems to be a head fake, especially when, again, we saw retail sales and the consumer stay strong. There's every good chance of that. There's a bond guru. I don't know how somebody gets a title, bond guru, but that's what the article said. Jeffrey Gundlach. Hopefully, I pronounced that at least somewhat okay, Jeffrey. But the idea is he's saying, don't bet on lower rates. We've seen the low. I do find it interesting that he's talking about a low for 19. When in my head, I'm like, well, why don't you talk about 2020? It's like right around the corner, which leads me to believe that he thinks there may be some headwinds in 2020, or he's only interested in his bonus this year and all of that. So who knows? But anyways, that was interesting. I do think there was one thing that we do need to pay attention to that hasn't happened since 2008, and that was the Fed had to come in and interject billions of dollars. I think it was $54 billion, and they're going to have to do it again today. It's 75 billion into the overnight lending market. This is basically where banks lend to banks for very short term. Apparently, it locked up, and the interest rate spiked. They should be call it around 2%, and they spiked to 10%, meaning banks needed the money bad and willing to pay for it. So the Fed came to the rescue. They call it a repo operation or a repurchase operation. Again, they interjected 54 billion yesterday and do 75 billion today. They're claiming it was because of quarterly taxes and some payoff of treasury bills. I don't get it. It's not like that stuff's not on the calendar and you don't see it coming. I think it could be a story that they're trying to give the public not to worry. Uh, but I'll be watching it because the money market hasn't locked up since '08. And if you were around at that time, you saw that there were several money market funds that went out of business because they had bad debt as they purchased to kind of fund the money market accounts. So I don't know. It could be something bigger going on. It could just be what they said. What do I know? But again, it's something you have to watch, right? Anytime there's these anomalies, especially when people start saying we haven't done this since the financial collapse, you got to pay attention. So I'll be watching that. They're doing it 2 days in a row. There was no talk of a third day just yet, but we will see. Uh, but so I will definitely be keeping a track of that and reporting on that every other day or so on these interviews. So that's what I have. I guess last thing we were talking about this week was the iPhone. Right, Apple had their launch. I think it was last week. I told you it'd be interesting to watch the demand because it is definitely a want, not a need. And I wanted to see if the consumers were willing to fork over, substantial dollars. The data's too soon, but I know that early reports are demand are strong, claiming the great camera, much better battery life, and apparently the price points were better than expected. So that's what I'll be watching. Looks like the consumer is strong. Looks like we've seen the bottom of interest rates for 19. The Fed decision today, again, I think Powell's locked into a quarter point. I actually want to see him not lower, but we'll see. And then mortgage apps are up. So really strong. Looks like things are going pretty good in the economy. So have a great day, and we'll talk to you tomorrow. Bye.